right, now, before we jump into it, just want to review some of our recently posted content from our previous discussions. We had a topic there on adding a cash secured put to help with rolling a diagonal spread position. We did a quick review of the trade simulator tool and how we use that to help us gauge what stops we might want to use, what should our targets be, and what our expectations would be for a given strategy. Had a discussion on trading volatility. How might one trade one of the volatility ETFs or ETNs, such as VXX or UVXY? Reviewed one of our signature tools, the Strike of Pain tool, which is sort of like a pinning tool. And of course, we discussed technical search criteria for the spreads that are shown on our defaults and other adjustments you might want to consider making to those, whether you're doing credit spreads, debit spreads, bull or bear as well. Those are all available on YouTube. You can just go to YouTube and look up Power Options, and you'll see all of our public videos there as well. In addition to that, we do have several playlists now available on various strategies, from covered calls, naked puts, different credit spreads, debit spreads, poor man's covered call buying, put buying, and so forth. There's about 8 to 10 videos in each one, and it's sort of designed to walk you through the basic strategy, criteria discussion, tools you can use on Power Options to help you find the positions, compare the positions, and the management techniques, winner or loser, in all of those strategies as well. So you want to make sure that you check that out there, and you can scroll through those different playlists to see which one best suits your needs. So it's 5:23 p.m. Eastern Time. Looks like we moved the, I think it updated earlier when we started the presentation, but March 18th, we did update the market sentiment tool. And it looks like with the recent movements we've had in the past few days, I believe this was, I thought I saw an article today that said this was the best week for the S&P and the NASDAQ of 2022, which we had we had a moderately terrible January, and we had a terrible start to February as well. And back and forth we went to some downswings there, and some parts of March weren't that great either. But again, it was probably the best week of 2022 I read. So that's probably triggering some of the bearish. What's bearish now? Looks like the put call volume ratio has gone into the bearish mode. The SPX number of days up, gone into bearish mode. The gap over the 20-day moving average has gone into bearish mode. I thought it would be the trend. It's not. It's the MACD gap against S&P 500 as well. But not a lot of others are close there. In fact, the days over the 100 is also moving into bullish almost, as is the trend. I was completely opposite on that, as is the VIX. That's moving back into bullish range. Oh, but the stocks over, the percentage of stocks across the market that are above their SMA 20, that's getting into the bearish range also. So that's why we're seeing just a light sell warning there. Usually we look for a stronger signal, or maybe 5 or 6 sell warnings in a row. We'll have to see what happens, of course, going into next week as well. James. Now, James, I don't know if you're currently in a trial to Power Options, or if you just jumped in to the webinar invitation that came out when we sent out the email today. But James says, I'm new. Where should I start? All right. Well, if you're on Power Options, one of the best places to start is the Learning Center here. And Ernie's got this video here, Introduction to Options. It's not all hedging with options, but he goes through the different things. This is a good starting point. Where Ernie essentially does is he breaks down the basics of options, but in the sense also of, if you're a new options trader, which option strategies should you focus on? Yeah, you're going to see a lot of things as a new options trader, and this is for James and everyone else. You're going to see, I know we have competitors. I know most of our competitors, not by name and handshake, but I know who they are, what they do. Some of them are excellent sources of education as well. Some of them have good tools, but I'm biased, of course. I love our tools best because the functionality of the search capabilities and all the strategies, the power of the portfolio tools, and much more. But in any case, I know, James, you come across it. I come across it all the time too. Someone's out there saying that, hey, let me show you quickly how you can make 33% per week trading options with covered calls. No, it's unrealistic. They had 1 or 2 trades that did that. They had 1 or 2 good runs in a good market conditions that were favorable for what they were doing, and they might have gotten it. It was an explosive run. They say we're going to do this every time. No, they're probably getting it 20% of the time, if that. Right? You're going to see things say you can make 3,000%, 300% in options tradings in 10 days. Let me show you my last 10 picks. Yeah, he probably traded 100 to 50 trades during that time. Where are the other 50 or 100 trades? They're not showing you those. They're showing you the top 10 over the last 20 days that made 250, 300% or more. So, the basic introduction that's true. Pick the strategies you're comfortable with. What do I mean by that? I mean, a good, again, place to start here is those playlists that I had mentioned there on YouTube, going through the covered calls ones. What I mean, James, is where are you at right now? If you're new to options trading by itself and you're just learning the strategies, start with the basic ones that you're going to be allowed to trade. What is your level of trading? If you just applied to trade options, you might be at level 1 or level 2 trading. What does that mean? That means you're going to be basically looking at just covered calls, buying calls, and buying puts. Learn those. Learn the benefits, the pros and cons, the reasonable expectations. Again, from some of those playlists there, that's a good place to start. We start off with, what is the best strike price for a covered call, the risk rewards, and so forth. Why use in the money and the comparison of in the money, at the money? Find out what best suits your risk reward tolerance. There's no point if you're only approved for level 1 or level 2 trading right now to start jumping into, what about bear call credit spreads where I can make 10, 12, 15% with a 70 or 80% probability? You can't trade those now. Start paper trading. Do some covered calls, things that you're allowed to trade. Long calls even maybe, and long puts. See some of the discussions we have on what can go wrong with a long call or long put. Even before you start paper trading, James, I would highly recommend this other topic that we had is developing a trading plan. Positions can go against you. Let me go back here 1 second on this page here. And I want to go back to there we go. Okay, I'm going to switch playlists real quick. All right, so what I wanted to switch back to is the long call ones. Topics here, what is the right delta to buy a call? How could just buying a call is compared to spread trading and things of that nature? I don't want you to watch this one yet. That's a little bit more advanced right now. When to close or exit, ways that you might look to manage a profitable call, but more importantly, when you would look to and ways you can manage a losing call, because you're going to have wins and losers in any strategy. Even bull puts, where you're looking at positions, or credit spreads, James, where you're looking at out of the money positions that might have a 75, 80, or 85% probability of success, you're still going to have losses, and you can't let those go to full loss. Buying calls and puts, credit spreads, debit spreads, you should never let them go to full loss. You want a trading plan of when you want to look to exit those positions. If you are just on level 1 or level 2 trading, level 2 especially is where you could buy calls and buy puts, I'd highly recommend looking into the married put approach. It's capital intensive, just like a covered call or cash secured naked put. You have to buy the stock. But instead of a covered call position, which is a good approach, and it's typically the most common approach. That's why it's always allowed on level 1. That's why it's the most common. Every broker allows you to do covered calls. But in a covered call, as we discussed just a couple moments ago for Steve, I cap the gains to the upside. Now, if I have a target that I'll make 2, 3, 4%, and I'm happy with that, but if I got a stock that jumps 15%, you're not going to see that. You're capped out at the top for your profit of 2 or 3%. But on the downside, it's still open. If the stock falls 15%, you could still be down 12, 13%. The married put flips it on the side where I'm buying stock, but I'm also buying a put option to only be risking 4 or 5%, maybe 6%, 7%, guaranteed, not like a stop order. If I set a 5% stop order on my covered call and the stock gaps down 25% overnight, when the market opens, they can only give me what the market's offering. I still get that 23, 24% loss on the position. That probably took out 12 previous covered call trade wins. This is guaranteed. The put gives me the right to force someone to buy my shares of stock at this price. Yeah, I pay a premium for it. That time value premium I pay is the risk. It might only be 6%, 6.5%, 7% or so. It's this, and then of course I can still sell covered calls against this. That's what's in this full blueprint, is the proper structure and the 12 different ways that we can use to lower that initial at risk and eventually have a no risk position, what's called a bulletproof trade. Collars, long collars, and married puts are a good place, in my opinion, for new traders to start off with. If you're planning on doing covered calls, you also want to check out the married puts and the long collars, because it's a guaranteed controlled risk of single digits. And in uncertain markets that we've seen, unfortunately, in the past 70, 75, 80 days, this is a good approach to use. Now, am I profiting on the newest position that I opened? No, that was AIG. It was open a month ago. I think I bought the stock at 62.70, and I have the 65 put out to August. It was a max risk of, I think, 6.1%. At one point last week, the stock was down 13%. I could liquidate the position for only a 2% loss, 2.2% loss on the position. Right now, though, the stock has moved back up this week. It's back up at 60, almost 61. So I'm only down 2% on the stock. I'm only down about 1% on the married, 0.5%, excuse me, on the married put position, James. Designed to protect you, keep you in the game longer with these positions. Then, James, once you go into that, start paper, get an idea of the concepts that you want. And we can help you with that too. If you're in your Power Options trial, you can schedule a coaching session next week with either Ernie or myself, and we'll help you more develop sort of the approach you want to do based on what your approval is and what you're looking to accomplish, and of course, how much money. Now, we're not financial advisors, but we can walk you through that as well. So once again, starting point, if you're on the trial, Basic Learning Center, the education there, the basic introduction to straight options. Check out some of those playlists there based on the strategies you want. Right there on our YouTube channel, you can go to playlists and you can covered calls that we saw before, one on naked puts. Let me get off of that. Earnings discussions, don't mess with that right now. But if you're interested in credit spreads, you can check out the series on bull puts, bear calls, debit spreads as well. Poor man's covered calls, similar to doing a covered call, but buying that leap. So we're not buying the stock outright, not paying as much money. I'm not saying you have to watch all these. Just pick one or two of the ones that you like, or one or the two of the ones that you're planning on using, excuse me, James, and go through some of those videos. Go through the introduction video, the structure, criteria discussions that are in there are always good to be familiar with what you're kind of be looking for, and especially the management ones. Hey, I can manage a winner. How am I going to manage it to get better? But really focus on managing the losers, because they will have positions that move against you. There's no strategy that's 100% success rate without management. There's no strategy that works 100% in all market conditions, okay? And don't be duped into unrealistic expectations, okay? That's one of the keys as well. We want you to make money. We want you to be successful. That's why we're here. That's why we educate. That's why we offer these tools, is to allow self-directed options investors to be successful, but it has to have the right management. Management has to be used, and you want to go in there. Then, once you've watched one or two of the strategies you feel comfortable with, you get an idea of it. Hey, what am I looking for with criteria? What kind of stocks would I look for on this? And let me see what I set as alerts or manage. What am I going to look at to manage these positions? And then start paper trading those strategies. Write down a trading plan. Hey, I'm going to do covered calls. Well, based on my account size, I know I'm going to look for stocks between $20 and $80. I want to be maybe 20 to 30 days out in time. Maybe I'm not using weeklies or 2 weeks out. Maybe I just want to be 20 to 30 days out in time. And I'm going to look to make a 2 to 3% return, but I still want some good downside protection. So maybe I want to have 5% return. What you've basically done is just written out 5 criteria that you would use in your search. But hey, with this strategy, when you go through some of the videos, you'll also know that, oh yeah, I do want to avoid earnings when I'm trading bull put credit spreads or covered call positions brand new. I don't want that sudden risk of a 10, 12, 15% drop where I could be near full loss on something that's completely out of my control. Now you're developing a trading plan. Now you put that into action. You interact with the search tools to find the positions that match your trading goals, the criteria that you want, and then we can help you with that also. But there's a lot of discussion here in those videos, also other videos on the YouTube channel, and directly in the Power Options webinars archive also in those cases, and then put it into action with paper trades first. I know paper trading is not the real thing as trading, but you want to see how the options react. Hey, the stock suddenly jumped up 5% today. What did that do to my position? Oh, the stock fell 3% today. What did that do to my position? How is the option that I have moving in this case? Okay. All right. And that's what you're kind of looking to do. And that's what you're looking for. That's how I think you should get started. And of course, like I said, if you're on your trial, you can schedule a coach. So if you're not on your trial, hey, you can call us at any time too during the trading day. Ernie and I are here. We'll answer any questions that you have. You know, we might not spend the full time with you because we want you to be an active member and using the site, or at least trying it out of course, but there are a lot of people who just call and say, what do your tools do? How should I get started? I field those calls a lot. People, and they usually sign up for a trial right there and start testing out the tools, and then they'll sign up for a coaching session later on as well. Okay, so Edison, when we got into that, James, I hope that does answer your question. There is somewhere on YouTube. I'll have to excuse me. I'll have to find the video if I can. I can't remember the title of it right now, but sometime later this evening after the webinar, I'll look for this video, and it kind of discusses that too, but it's better planned out. It had a checklist that was there in that case. So I'm going to try to find that for you on YouTube, and then I'll send it to you via email.